You are listening to ChartingWealth.com's weekly review and forecast for the week beginning the 10th of October, 2016. Let's jump right into the markets IYY. We have another down week. We are down since the 9th of September. The market's crossed over going down. Two big down weeks, the week ending the 9th of September and the week ending the 16th. The market has really just not done a whole lot more than slide sideways since then, although this week is the biggest down week that we have seen since that big down week on the 16th. The week ending the 7th of October is a down candle, a lot more down movement than the week ended up going down. We have both a weekly and a 2-day trend line going down. Be sure to note that on your daily market review. That is for all of you who are using their daily market worksheets. Please note that down. Now let's look at what went on during the course of the week. The week, of course, opened on the 3rd. What did we see go on? Well, that was a down day followed by a down day on Tuesday. Wednesday was a little bit of an up day and then more of a down day on Thursday and Friday. As far as our Heiken Ashi candlesticks goes, we have a 2-day trend line. It's pretty much paralleling our weekly trend line. Everything is down. The daily trend line crossed over going down. That is the daily MACD paralleling the down moves that started on Tuesday on the derivative oscillator. So confirmed down moves on the weekly and the daily and the 2-day chart. That is where we are as we ended the week on the total market. Now let's go back to the to the weekly chart, and we will take a look at what's going on the S&P 500. Oh, for the record, IYY, the total market index fund, down 0.38% on Friday, 0.34% for the S&P 500. Going to zoom into that a little bit. Crossed over going down on the 9th of September and has slid sideways. This is the first down week since the 23rd. And what do we really have? Well, it's more like a doji. There was down movement a little bit over the course of the week, but a whole lot more volatility going up and down. We do see that the derivative oscillators continue to heat up going down, and the MACD is actually in a down move, not in a sideways parallel move. It's actually going down, moving away from the red signal line. If we look at what's going on the daily chart, looks very similar to what we saw on the total market, down on Monday, down on Tuesday, a little up on Wednesday, and basically dojis Thursday and Friday. We've not yet crossed over, though, going down on the daily chart. And we can see the derivative oscillator is still in the positive. The market's really been sliding sideways. Makes it hard for our MACD to work very well on the daily chart on the S&P 500. Now we're going to go back to our weekly chart, and we will take a look at the Qs. What is the Qs? Well, of course, that's the Nasdaq 100. And on the weekly chart, we are still in a confirmed up move, have been since it crossed over back on the 8th of July. The Nasdaq 100, the technology stocks, did see some down movement from the week ending the 26th of August until about the 16th of September, then started moving up, and again another up week for the Nasdaq 100. We have a green up candle. Again, unlike the total market and the S&P 500, the Nasdaq is up. We will note, however, the derivative oscillator has lost a lot of its energy, and the MACD is no longer going up as it was in the prior week. It's actually slanted over and is going down, not even paralleling. So we shall continue to watch. There is a great deal of weakening. If we look at the highs on the Nasdaq 100, we see that it really reached its high back on the 23rd of September and has not gone above that since then. So we'll continue to watch that. If we look at what happened during the course of the week on the daily chart, we, of course, see that starting on Monday the 3rd, bit of a down day, up on Tuesday, Wednesday, down Thursday and Friday. Derivative oscillators in the negative, and the daily chart crossed over going down on Friday the 7th of October. Now, lastly, as far as our charts go, before we get to the news, we're going to go back to our weekly chart. Take a look at gold. Oh, for the record, the Qs was down 0.22%. Gold up 0.07% for the day on Friday, but we see a huge down candle on the weekly chart, a huge down moving 2-day trend line, and the weekly chart is continuing to move down. Actually, gold crossed over going down on the weekly chart back on the 19th of August, and a huge down week over the course of the week, with the week ending on the 7th of October. About as much movement down on the down wick, and of course the bulls were able to pull it up to about half of that total loss as to how much it actually got pushed down. If we look on the daily chart to see what happened over the course of the week, you can see the week started off with a down move, huge down moves on Tuesday, Wednesday, and Thursday. A little bit of a recovery on Friday, like we said, up 0.07%, but major down moves. Derivative oscillator continued to move down, as did the MACD and the signal line. So gold is in a big down move. Remember, our 4-hour chart is a great chart for trading in gold. It stopped working at the end of last year and started working at the beginning about into February or so of 2016. It started working again. So please continue to pay attention to that. We had some people write us at the website about how well that has been working for them in their practice trades. Now, let's jump into the news and what we see going on throughout the course of the week. What happened? Well, we saw that, and again, this is being reported, that a December Fed hike might be in play after the employment report. What does that mean? Well, employment for September was somewhat weaker than expected at the headline level, but it was not weak enough to dampen an anticipation for a quarter-point hike in the Fed's fund rate targeted for the end of the year. The market's roughly pricing about a 72% chance of a rate hike in the FOMC meeting in December. We'll see just what's going on. We would note also that average hourly earnings rose a little over 2.5%. What's happening with our good friends across the pond over there in England? Well, the pound has actually hit a low, first time since like 1985. We see the pound hitting a post-Brexit low of about 126. We shall continue to see how all of that shakes out in the UK. Global inflation. Now, if you can believe this, with all of the money printing. In fact, there's an article here about how the European Central Bank quashed any tapering speculation. That is, that they were going to just quit printing money backed by nothing. Well, that was reported on Bloomberg, apparently, and the ECB quickly shot back. Oh, no, we're going to keep printing money. There is no discussion of tapering taking place. Well, that with the backdrop of this news, that global inflation is at its lowest level since the financial crisis. Can you believe that? Unprecedented monetary stimulus is being employed by the world's central banks. That's across the globe, but global inflation has fallen to its lowest level since the immediate aftermath of the latest financial crisis. The OECD reported that inflation for the group of 20 nations actually fell a little over 2.5% in August, and that is the lowest level since late in the year in 2009. Most worrying, the biggest drops came in places like India and China, and those, of course, are the fastest growing global economies. So put that in your pipe and smoke it. What else do we have going on? Well, we saw that Florida appears to have been spared from the worst of Hurricane Matthew. Also, the Eurozone's composite PMI has continued to decline. Now let's talk about what might be affecting the markets over the course of this next week. The International Monetary Fund is, of course, having its fall meeting in Washington, D.C. They're going to conclude on Sunday, so we'll see what that news looks like on Monday, the 10th of October. Also, the big news that can affect the market you're going to see is going to be on Wednesday, the 12th, and that is going to be when the September minutes of the Federal Open Market Committee are released. particularly good or bad news can roil the market. So if you're in trades on Wednesday, just be cognizant and careful of that. Thursday, China's going to release its trade data. If that's particularly good or bad, that could affect things on Thursday and or Friday. And then on Friday, going to have a couple of things happen. Janet Yellen is going to speak at for the Federal Reserve. Was she going to speak at a Boston meeting on Friday? So see how that impacts things, along with U.S. retail sales numbers. And again, if they're particularly good or bad on Friday, they can affect things. Well, folks, that is how our weekly charts shaped up over the course of this last week. If you are following us on a daily basis, I sure hope you are, if you want to learn how to read these charts and get really good at it, because they are your pathway to wealth. They're literally a roadmap. You learn to read these charts, it's going to be like money in the bank if you can forecast where these markets are going. It's just like, I mean, it's for those of you who've been practicing this a long time and have gotten better at it, you know exactly what I'm talking about. So please make sure that you practice with us every day and that you fill out and use our daily market worksheet. Why is that so important? Those of you who've been doing it and have written back to me about it, you know what I know, and that is there's nothing like taking down your thoughts, putting them on a piece of paper, charting them each day. If you want to know exactly what I'm talking about, please go to the website, go to our iTunes, go to our Charting Wealth, of course, website, and also our Charting Wealth YouTube channel, and listen to the training that we have done on the market worksheet and how to fill it out. I actually took one, filled it out, and then went back to the charts, to the market worksheet, and showed you why I wrote what I wrote and what I was thinking when I did it, and it'll show you how to use that. If you do that on a daily basis as you listen to the broadcast, you will get so much out of it. And also, as you listen to this weekly review and forecast, it's so important for you to note where those weekly charts are on the total market, the S&P 500, the Nasdaq 100, and gold. And again, if you want to apply this to other stocks, other indexes, commodities, ETFs, you name it, you can sure do that. But practice with us, get good at it. We're an education firm. We're not a trading firm. We don't give you market advice. We ask you to open up your own virtual account at one of the online brokers and practice. Once you get good, you can make your own decisions. We love to hear from you. If you want to help us out and appreciate what we do, always ask you go to iTunes, subscribe to our channel, give us a 5-star rating. Go to our Facebook page, Charting Wealth, give us a 5-star rating, say something nice about us. Go to YouTube, subscribe to our channel there. That's where we release everything first, in addition to those who subscribe to our newsletter. And that means that you get these broadcasts every day, first thing, as soon as they're prepared and uploaded. Thank you so much. God bless. Hope that you have a great week from chartingwealth.com.